Okay. I mean, we're going to kick off right here, right now. A very good morning, good afternoon, good evening, wherever it is that you are joining us from. You are warmly welcome to the Ananse Roundtable 3. I'm always so excited having these conversations because one of the things that I love about the Ananse Roundtable is we are not just talk. We are talk and more action. Now, the Ananse Roundtable is pretty much a platform where we gather some very key stakeholders within the fashion and design industry in Africa, and even beyond that industry, other industries that are relevant to the fashion and design industry. We gather here to have critical conversations about the industry, the issues plaguing the industry, also preferring solution whilst we highlight the progress within the industry and we influence policy. And you see, the last Ananse Roundtable, which was fantastic, one major issue that arose during that roundtable was the issue of cross-border trading. Right? Just taking a leaf from the report, the survey from the Ananse report back in 2023-2024 that found out that over 70% of MSMEs within the fashion and design industry, they're hesitant to engage in cross-border trade for multiple reasons, for barriers like customs delay, or lack of market knowledge, or fragmented financial systems, and the list goes on and on. And that brings us to today's conversation, where we're going to be talking about building trust and infrastructure for MSME across or cross-border trade in Africa. And we have such a powerful set of panelists who will be sharing their insight and the way forward. My name is Ifunanya Igwe. I'm an international event host, and I will be moderating this session. Now, this session is brought to you by Ananse, which is supported by MasterCard Foundation, and it is in collaboration, of course, with Botho. So we're going to be kicking off to set context. There is going to be a presentation by Botho Emerging Markets. We're going to have Mwinde Mwanzi, who is an analyst with Botho. So Mwinde, please take the stage.
Thank you so much. Thank you, Ifunanya Igwe. Thank you so much for this opportunity. So good morning, everyone. And as Ifu mentioned, today we'll be discussing about building trust and infrastructure for MSME cross-border trade across Africa specifically. So we'll get right into it. So at the moment, the African e-commerce market is currently doing really well. We've seen growth over the years from, I think, 1990 to around 2022. There's been an annual growth rate of around 17% annually. And the sector is projected to reach, I think, $75 billion in annual revenue by the time we get to 2028. This is really good growth rate. And in Nigeria, if you take a deep dive into a country like Nigeria, 20% of the business to client e-commerce sales are actually in fashion and textile apparel sectors. So this is because there's an emerging preference for made in Africa fashion goods, made in Africa fashion statements, shirts, sandals, and the like. So while the sector is growing, there is a challenge that we're noticing. One is that 70% of MSMEs in the fashion and design-led sectors are not willing, they're avoiding trading across borders. How do we see this? While Africa's total merchandise trade stands at $1.5 trillion, only 16% of this is intra-African trade. That means only 16% of the $1.5 trillion is actually trade between countries like Nigeria, Kenya, African countries trading between one another. So why is it that many of these African countries are unable, or many of the MSMEs in these African countries are actually unwilling to trade with one another across the continent? Many of them, as per Ananse's data, cite that the challenge is in cross-border custom delays, payment issues, and lack of market knowledge. This is mainly because for payments, one, there's a fragmented payment infrastructure, whereby for an entrepreneur, they have to manage or navigate across 277 mobile wallets and more than 500 banks for them to be able to pay across the 55 countries. So that means If I'm paying for something in Kenya and I'm in Nigeria, I have to have a wallet all the way in Nigeria, all the way in Kenya as well, and manage the complexity of the Forex exchange, which is complex. On top of that, this payment challenges, they charge, I think, it's an 8% to 30% transaction fees. For an MSME that's making 10 to 15% in profit margin, that wipes away their entire profit. That's the challenge when it comes to payment. When it comes to logistics and customs, the main challenge is on custom delays. Research done by Ananse in the last white paper shows that for customs, it takes, I think, an average of 12 working days for goods to be cleared across African countries. So that's a long custom delay. That's one. The second thing is that the average cost of transporting goods in landlocked countries, specifically if we take a look at East Africa, it's way high. It's $1.8 per kilometer as compared to the global average, which is $1 per kilometer. So this logistics costs end up adding up 40 to 60%. They eat up 40 to 60% of the goods value, leaving African MSMEs at a disadvantage, forcing clients to prefer imported products from China, from other countries, etc. So that's the main challenge, is that that's the reason why 70% of MSMEs are actually hesitant of trading on across borders, and this leaves them preferring or limited to their local market, whereby if they're limited to their local market in their regions, they're unable to scale, they're unable to grow, and they're unable to tap into the entire African continent. So that keeps us. So what is actually being done in the ecosystem? If you take a look, we have Ananse, who is one of the conveners, is the convener for this discussion. One of the main things that Ananse is doing is Ananse provides its e-commerce platform, which is a tool that allows merchants all across Africa with market access to trade and integrate the services and sell their goods all across Africa to clients all across the continent. To leverage on the payments issue, Ananse has partnered with EcoBank, which is a major bank across the continent, allowing unified payment processing, a single settlement account, and whereby Ananse handles the back end of the currency switching, and in partnership with EcoBank, the buyer can pay their currency and the merchant on the other end receives it in their currency. So that's the second thing. When it comes to logistics, as we had mentioned earlier, the logistics in Africa is unreliable because of customs delay, the high customs cost, and also the lack of trust. Because merchants, number one, are unwilling to sell their goods because they don't trust that they will get paid once the goods have been delivered. The other aspect is that the buyers themselves are unwilling to pay for goods because they're unsure that whether the goods will be delivered. So that leaves the people in a catch-22 situation. So with Ananse's work here, Ananse has partnered with DHL to create a streamlined, reliable, and more cost-effective logistics framework. So making international shipping a bit viable for MSMEs. So in this context, while we can see, yes, Ananse has the solutions tailored to address some of the challenges that we have talked about, the challenges of logistics, the challenges of payment, and the challenge of trust specifically. One of the main discussions that we're supposed to have today is how can we evolve Africa's digital and logistics ecosystem to allow MSMEs to confidently engage in cross-border e-commerce? How do we do this? What sort of partnerships are needed? How do we leverage the AFCFTA as it is? And how can we ensure there's a unified payment system across the entire continent? That's going to be the main discussion in this roundtable. So from here, I'd like to give it back to you, Ifunanya, and you can take it from there. Thank you.
And you know what? Kudos for pronouncing my name so well, even better than I do. Thank you so much, Muinde, for that very comprehensive presentation. You see, there's so much that I learned even today. And as we carry on the conversation, we're going to explore that even more. So we're going to move on to a conversation with the CEO and the founder of Ananse, Mr. Sam Mensah, who is a fashion entrepreneur, and he's created this platform that is a comprehensive platform to empower and enable fashion entrepreneurs across Africa. Mr. Sam, good morning. I believe it's morning where you're at. Good morning.
Morning, Iffy, and fantastic to be with you again. And well done, Mensah, for a very good synopsis of the data and the issues.
Absolutely. Even the last conversation we had at the last roundtable, I did mention how you have been able to experience firsthand some of these issues that Mwinde had highlighted. Hence, obviously, why Ananse has been able to create a platform that addresses these issues. But we always say that Ananse can't do it alone. And that's the reason why we have these conversations. Now, one of the things mentioned was the fact that over 70% of entrepreneurs, fashion MSMEs are hesitant to engage in cross-border trading. I want you to tell us from your own experience, first-hand experience with these entrepreneurs, how do they view this challenge?
Yeah, so excuse me. So the reality is that for a lot of fashion entrepreneurs, cross-border trade is simply more trouble than it's worth. There's so many issues that they have to navigate in order to get their products to other markets outside of their own country, that if they're not careful, sometimes the risks actually outweigh the benefits. We are in a unique position as Ananse because we are at the intersection of commerce, payments, and logistics. Even though at our core we're a fashion company, in order to deliver fashion products, we have to do all of these things, and we have to interact with all of these players and the creatives in the industry. And what we see is that Africa doesn't lack talent. We have an abundance of creatives with talent. The challenge is that they are constrained by systems that were really not designed for MSMEs. Most African countries the economies of most African countries are extractive economies. They're built primarily on trading their natural resources with the rest of the world and importing finished products. So the entire logistics and payments systems that support these economies are designed primarily for these large industries, mining, oil and gas. Those are the industries that typically export to the rest of the world. And that's really the focus of the support systems and infrastructure, and not really small fashion creatives. And so what you find is that because of that, it introduces additional challenges when they try and scale outside of their markets. I remember this my two presidents story. There was not so long ago, two African presidents were having a meeting, and these presidents were both founding members of the AFCTA. In that meeting between the two countries, there was a lot of self-congratulation and, patting themselves on the back. What a fantastic initiative AFCTA is, which it is. As it so happened, that very same week, we at Ananse had a shipment of fabric coming from one of those countries to the other country. And we were also excited about AFCTA, but what we found was that we actually had to pay duties despite all of the celebration around the AFCTA hadn't become operational. So these are the kind of disconnects that exist in the system, some of the frictions that exist in the system. And that's why it's so important that, we have conversations like this where we can bring, different players in the industry, from the various parts of the ecosystem, whether it's trade, policy, finance, logistics, and have these conversations about, what do we need to do to tackle these challenges, the challenges of fragmented customs, inconsistent rules, the lack of trade finance, the high finance charges Mensah was talking about, logistics costs that kill margins. So these are all as a basket of issues, really, that discourage African creatives from wanting to trade outside. It's sometimes just not worth the trouble. And we hope that with our conversation with our panel, we'll be able to unpack some of these issues and work towards practical solutions to these challenges.
Absolutely. Thank you very much for that. Now, speaking about practical solutions, one of the things that Mwinde also did mention was the partnership between Ananse and DHL, which I think is absolutely brilliant, because one major issue is the cross-border logistics. A lot of times you would see the item you're buying, right, is not as expensive as delivering that item. Even very recently, I faced that as an issue, which I almost fainted. I was just like, what? And now that Christmas is coming, dirty December, thankfully, this partnership has kicked off so that we are able to get some designs from these African countries. But I just want you to just speak to us more about that. How does this take off the burden, the financial burden, from some of these MSMEs?
Yeah, so I think at the core of how we like to approach problems is collaboration. And this is an example of a collaboration with a powerhouse in international logistics. And we, go to them and have an honest conversation about how we can put together a structure that is mutually beneficial, but that also breaks down the costs. Because we deal with thousands of creatives across the African continent, we are able to aggregate that demand for a major player like DHL, and therefore our negotiating power and the leverage that we have when it comes to pricing is much more than a single designer will have, trying to negotiate with an international logistics company. And so because of these kinds of engagements, we're then able to pass on these cost savings to the fashion creatives and also to their customers, thereby reducing that cost. It's often the case that, you want to buy a beautiful pair of sandals from Kenya for $20, but the shipping is $30 or $40 or $50 even, depending on where you are. And then that just destroys the economic rationale for the consumer to want to make that purchase. So it's a really important partnership, and we hope to cultivate more like that to support African creatives in trading.
Fantastic. Thank you so much, Mr. Sam Mensah. We're going to move on to the panel where we're going to hear more from you. So we appreciate the insight that you've shared so far. Now, this takes us to just introducing the panelists. Can each panelist please take out time to introduce themselves? Everyone has 1 minute each, starting with Roberta Annan. I'd like you to just introduce yourself and the platform you represent.
Thank you so much. It's really a pleasure and privilege to be on this platform. I'm Roberta Annan. I'm dialing in from Accra, Ghana. I'm the founder of African Fashion Foundation. It's a nonprofit organization that has a strong focus on building and supporting fashion designers from the continent. We focus on three main things. Number one, collaboration. I'm glad Samuel mentioned collaboration in his presentation as well. Convening, which is bringing everyone together to discuss issues and find ways to have, solid, constructive resolution to those issues. And then number three is cultivate, which is what I'm going to focus on today. And through cultivate, we support through incubator programs, scholarship programs to help enhance and build the businesses so they can have a solid platform to trade intra-Africa and also looking at global opportunities as well. So thanks for having me on here.
All right, Roberta, thank you so much. And I would ask you to say...
yeah.
yeah. All right. So let's go to Otsetswe as well. Please introduce yourself.
Good morning, everyone. Otsetswe from Botswana, the current acting CEO under the National Arts Council of Botswana. So we're an entity that has been created by a statute of parliament to help develop and commercialize the creative and cultural sector. And we do this by putting in place programs and policies that facilitate, one, the movement of our creatives across borders. We do that by giving them grants. Similarly, on the commercialization part, we negotiate with our partners, both internally in Botswana and outside the borders, to create access to markets for our creatives to actually sell their products. Thank you very much.
All right, thank you very much for that. Sheon, please go ahead and introduce yourself.
Hi, good morning, everyone. Good afternoon from Cairo. I'm calling from the African Bank, where we are focused on promoting the intra-African trade and industrialization on the continent. Within the bank itself, I sit specifically with the SME development program. And that was a specific program designed to address the challenges of, let's say, financial and non-financial issues that our SMEs go through. So we put together programs, initiatives to address specifically some of the problems that you've talked about. We'll touch on these a little bit later in the conversation, but this is purely not an exhaustive list of some of the challenges we're trying to solve. Thank you very much.
All right, thank you very much. I'm just going to breeze through a couple of questions for each panelist before we then get into the conversation, starting with you, Roberta. It's been predicted by 2033, the demand for high-end African fashion would increase by about 40%. Has the foundation noticed this, and what exactly are the external markets actually looking for when it comes to African fashion and creativity?
Thank you so much. I mean, absolutely. We've seen the shift very clearly within the foundation. An important figure to also note is the fact that by 2050, is it a quarter of the world's population will be African? So when you talk about fashion, right, fashion is about trends. And if a quarter of the population is going to be African, it means that we are going to be the trendsetters, right? So there's a huge demand that is globally, everybody's looking at African fashion. If it's not just our fashion alone, our creativity, but that's a different conversation. Just yesterday, we had an African model from South Sudan win the Model of the Year. Things are shifting. We had someone from Cote d'Ivoire who represented Africa on a Miss Universe scale and came out as top 5. Of course, there are controversies with that. I feel she won, but we're not going to go into that. So Africans are going to be setting trends that the rest of the world will follow, right? But, again, one huge problem is access. We don't have access to market. We don't have the right infrastructure, intangible and tangible infrastructure set up for us to compete on a global scale. And that is why I like platforms like what Ananse have created. What our African Fashion Futures Incubator do is to prepare the designers for the global positioning. Access to market is not just doing a fashion show and presenting designers. When the designers go to Paris, Lagos, wherever it is, they're going to meet buyers, and they should be prepared, with line sheets, with proper, products which are good quality to be able to sell to the global market. So I see the trend is very exciting, but I don't want Africa to just be a trend. For me, fashion is a business. If you look at the Forbes list, top 10 richest people in the world, you see Bernard Arnault. He's built his whole wealth around fashion. So there is potential here for us to do the same, but we have to look at it as it's a machine, right? There are different facets of it. There's the PR, there's the production, there's the online, everything. It's all encompassing. It's not just one aspect. It's not just the creativity, because the creativity is in abundance, but it's actually making sure that we have the right tangible and intangible infrastructure in place to compete on a global scale. And then funding. I think the previous discussion, the sessions last week was on funding, access to finance. One key thing that we are interested in doing is to create avenues to finance fashion. But before we get there, we need to build the businesses create a valuation for any financier to come in, because you cannot just throw money at a problem. You need to put and invest money into a business, a thriving business that is going to turn a profit. And for us, we felt that to get to the finance aspect, we need to build and groom the businesses. We are on our third incubator. And our incubator has 15 brands, 5 from Rwanda. We have Sierra Leone, Ghana, Nigeria, also in the incubator program. And we have a very solid 1-year rigorous, program that we've developed with partners to ensure that they are looking at topics like even putting together their business plan, pitching to investors, e-commerce. All of these things are important. Because I believe that we as Africans, when it comes to creativity, we are blessed with it. It's part of our rhythm. It's part of our movement. It's part of the way we look. Do you understand? Our food is in our culture. But let's find a way to harness all of that and create cultural currency out of it that is going to drive our wealth and prosperity as a continent. Thank you.
Thank you so much. That was very loaded. Otsetswe, we're coming to you right now. Just taking a look at what the National Arts Council in Botswana does. We've seen it to be one that preserves culture. So they're cultural preservers. But now, is there a way that you're shifting towards being aggressive enablers of the creatives within the Africa space? Because there's so much that we can give to the world.
Thank you very much for that question, Ife. I think one of the things that as the African continent or countries generally is we have seen a significant shift from arts councils being traditional cultural preservers, but there's a shift towards commercialization of that particular aspect of the creative industry. For example, we've just been talking about fashion. I must note that traditionally the creative sector has remained untapped. Perhaps this is due to its predominantly informal structure and its perception as a source of entertainment over and above being a commercial viable transaction or activity that actually contributes towards the GDP. I mean, we'll all agree that the creative and cultural sector encompasses a vast array of activities. We talk visual arts, we talk performing arts, we talk literary, we talk about crafts, music, and as well as fashion, which have not always been areas that were looked as an income generation activity. So this also has had an impact in terms of the way the funding models happen. Many of these activities have relied heavily on patronage, grants, and philanthropic support, as opposed to determined, deliberate efforts to actually fund and make sure that we fund for sustainability. We make sure that we fund for income generation that would also drive other sectors of employment, for example. Now, as a consequence, there has never been sustainability. There has never been a requirement, nor for an impetus to actually grow, nor create wider accessibility for these creative and artistic endeavors that we are currently talking about. And one of the things that I must highlight as being part of the reasons for the shift from traditional or the traditional preservatives to trade enablers is the fact that we have now seen that culture, creative sector, the fashion contribute towards the global economy. I mean, if we look at the statistics from the UNCTAD from 2024, we realize that our sector has contributed about 2.3 trillion US dollars into the gross domestic product. Mm-hmm. So that is why within the Arts Council now, within Botswana, there's a shift towards making sure that we actually commercialize. And that commercialization talks to making sure that when they are products that are created by our fashion designers, they are able to sell in markets outside. One that talks to the quality of the products that are created, that talks to the ability to transport them from Botswana, maybe to Ghana, maybe to Kenya, maybe to Nigeria, even to Europe, to make sure that when they get to those markets, there's an appreciation, there's already a customer database so that there can be an income generation. So I'll say that is why we in Botswana, through the National Arts Council of Botswana, we are now taking a shift to ensure commercialization. And I'll just give an example because we've been talking about several speakers have talked about fashion. One of the things that we have done collaborating with our international partners, the French, was an incubation program that is called Creative Botswana. This is where we had fashion designers in Botswana who were taken through master classes. We had international fashion gurus coming from West Africa, from South Africa, even from Europe and France, to come and capacitate our fashion designers. Then we took them out of Botswana to South Africa to actually see what the production houses are. We took them to France to help them appreciate what the market is in France and also participate in some of the fashion shows. This is how, as a policymaker, as a government implementing entity, you take deliberate action to actually make sure that the whole fashion ecosystem is actually capacitated to realize the commercial value of it. Thank you.
All right. Thank you very much, Otsetswe, for giving us those details. Seun, we're coming to you right now. We know that the Afreximbank has been leading the charge, enabling the AFCFTA. So I want you to just tell us how the bank is working with institutional stakeholders to enable MSMEs capitalize the AFCFTA opportunity, especially those that are operating in the creative economy.
Yes, no, so thank you for that, and thank you, Ananse, for putting together this, really important topic. I think we all recognize the importance of SMEs in the GDP contribution on the continent, as well as the creatives and their role in that as well. So first of all, Afreximbank, we certainly recognize the important roles that SMEs do play as an economic growth engine on the African continent. To provide some context, 90% of the businesses on the continent are SMEs. They contribute to about 50% of Africa's GDP itself. So when you talk about the implementation of the AFCFTA as a single market opportunity of 1.4 billion people and the GDP of $3.4 trillion, these SMEs really sit at the core of the success of the AFCFTA implementation. We recognize that wholeheartedly. And to that end, what then is the bank doing to help address or remove the friction such that these creatives and SMEs can actually trade across border a little bit more easily? And I'll talk about just three things, but this is not an exhaustive list. Some of the things that we can look at, thematically speaking, if you will, is one, the trust deficits that exists with SMEs trading between themselves, among themselves, across different countries. For that, the bank has created Mensah, and Mensah is a digital repository tool of KYC verified businesses across the continent. This is to help address some of that trust deficits, such that if you are a Nigerian buyer who's looking to purchase raw materials for your goods from, let's say, Kenya or Ethiopia, you then have a list of some of the businesses that have been verified, have had their due diligence checklist crossed, and you're able to build trust within engaging with those companies in those other markets. Now, after you've developed some level of trust with these companies, the next stage is, well, okay, I now have the willingness to do business. What then are the issues that I may face to conduct some kind of exchange in value, right? And really, a lot of that comes down to the payment infrastructure itself. So what the bank is doing so far, or has done so far, is create the Pan-African Payments and Settlement System in collaboration with the African Union and the AFCFTA Secretariat. This was really set up to tackle the payment infrastructure challenges that the SMEs have had for quite some time, and our fellow panelists did allude to this earlier in the conversation. Essentially, the benefits is to be able to settle payments in your own local currency. So what that does is it makes your transactions a lot more efficient, a lot more faster, and moreover, it really brings within the continent the settlement fees, the processing fees, which otherwise would be done outside the continent. And this costs several billions of dollars per year. So you're not only adding the efficiency value of it, but you're also saving funds as well and keeping it within the continent. The third thing, once you have that payment infrastructure and some level of willingness to do business and trust, is how do you set standardized and harmonization across the continent for your goods and services? This really speaks to the training and capacity building for products being sold such that they have the same quality standards across business. It speaks towards being able to have the requisite business skills such that you are able to be knowledgeable about the AFCFTA and take advantage of it, and also be knowledgeable such that you can actually raise funding, whether that be debt or equity in the capital markets. And so this is something that African Bank also provides, and we can get into some of the details a little bit later. The last thing I do want to touch on, because my previous panelist had mentioned market access. So we have the Intra-African Trade Fair, which happens every 2 years. The previous one just finished in Algiers. And essentially, this acts as a unique platform to facilitate businesses, investments, collaboration, where speaking specifically to the creative sectors, they can come in, showcase their products, engage with potential investors. And I must say that the next Intra-African Trade Fair is actually taking place in Lagos, Nigeria in 2027. So I'd say look out for that as well.
Definitely, I will be looking up. Thank you very much, Seun, for that. We're going to be moving on to the next segment, which is the panel session, where all the panelists will be engaged in conversation. And you know, one of the things that I love about these conversations is at the beginning of when each panelist is either introducing their thoughts or their organization, there's always a common thread that we begin to see across. It's either a thread from the last conversation that we had, we were hearing about the cross-border trading and the AFCFTA, hence the reason why we're having this conversation today. One thread that I'm beginning to see build is the thread of collaboration and capacity building and standardization so that we're able to compete on a global stage. Who knows, that might just be the next conversation. But I love that Ananse with the Center for Design is already preferring solution in that aspect. But like I always say, Ananse can't do that alone. So now let's move on to the conversation. And please, all panelists, stick to the 2 minutes that you're giving, but also if you think that you would like to maybe just like make a contribution to what any of the panelists have said, please feel free to just show by hands. I'll be here looking at you so that we can get into the conversation because we expect it to be an actual conversation. All right, so we're just going to start off with this, and Seun, you just spoke, and we're just going to carry on with you. This conversation about collaboration, especially between the public sector and the private sector, where should the public sector make the single most critical collaborative investment in technology to actually accelerate MSME access to regional payment rails?
Yes, thanks for that. And that seems like a pretty decent segue into what I alluded to earlier, which is the Pan-African payment and settlement system that the bank has been putting together. And so far, what are the benefits that you can get from supporting this is I talked about the lower transaction fees, the instant settlements of payments in local currencies, and really this leads to a more supportive and integrated African markets. In terms of the progress that we've achieved so far and what we're continuing to achieve, we've had about 160 commercial banks across the continent now working with us. across 19 countries. We have about 15, we have about 5 fintech players, and a number of central banks as well, who are supporting us in adopting PAPs. So spending more time and more efforts in this only creates a more integrated African market as far as the payments payments channels are concerned, because this is very key infrastructure that would enable the free flow of goods and services and payments across the continent. So I would say the payments and African payments Pan-African payments and settlement system has to be, the one that governments must support and really provide a bit more resources to.
All right, thank you very much. And just you speaking about this, Roberta, just listening to what Shion has mentioned that Afrexim Bank is doing with this payment system, essentially to consolidate it, especially within the African space. What are your thoughts about the single most important investment that you believe the government across Africa should make as it concerns, payment systems such as this?
Yeah, so I was actually going to talk about that. I'm glad there's a solution to it. I will have to check into the solution that he mentioned, the PAP system. I remember it was mentioned a few years ago, so I'm glad they've actually launched it and it's working. But I would also mention that not just government. In Africa, we tend to rely so much on government, but private sector should also invest in, continental connectivity layer, where mobile money, for instance, can speak to a wallet. For instance, if I'm in Ghana, my mobile money wallet can speak to that in Kenya, where a seller in Rwanda, for instance, can receive a payment from Zambia in their own currency. So let's make sure that it's connecting not just, banking systems, but also like the mobile money, because in Africa, we tend to use a lot more of that. People in rural communities have access to a smartphone. They may not necessarily have access to a bank, right? So we can also make sure that there's that form of integration. And then one key thing is we need to talk about payment. It's very important because that's the commercial angle of any creative business. It's the fact that they can receive their money on time. They're not going to have any restrictions to forex, changing of forex and, banking operations and all of that. So it's really important to be able to address that and have a seamless mechanism in place. Because if you're talking about investment, if I'm putting my money into a business, right, I want to make sure that I can get my money out with some form of an upside. But if that business is having difficulty, doing business with, another country, then it's going to be a challenge for me as an investor. So we have to start looking at all of those things and put all the mitigation measures in place. And then one thing that I wanted to mention here, I had written it down, so I'd like to read is that, for instance, where fintech can plug in once and reach the whole region, it's important because this is the backbone that turns regional payments from a privilege into a basic utility. And the beauty is this: once the shared infrastructure exists, everyone benefits. Startups can innovate faster, banks can serve MSMEs more easily, marketplaces can onboard more sellers, and every entrepreneur in this room can gain access to a larger customer base without extra compliance hurdles or long onboarding processes. So that's the little contribution that I can make to that topic. Thank you.
Wow, thank you so much for that. And I'm just going to move on to Sam, just based on what has been said so far, specifically talking about the financial aspect, because I think another thread that we're seeing is how it's important for us to take out the barriers that make us so fragmented as a continent, and we've spoken about the financial aspect, having that sort of like consolidated platform. Now let's talk about the logistics aspect, something that we had mentioned before. Tell us how you believe that maybe logistics innovators, for instance, and trade finance providers can collaborate to ensure their digital platforms are interoperable and they provide the MSMEs with a single trusted source for transaction to delivery, because that will definitely bring some form of ease to doing business.
Yeah, so I mean, I think one of the recurring themes that has been raised on challenges is the issue of fragmentation. I think Mwanzi in his introduction spoke about, 270 odd mobile wallets across the continent, 500 plus banks. And so that level of fragmentation makes it difficult for SMEs to operate, not just for payments, but for logistics, and also for finance. And so what's missing is a form of shared trusted data infrastructure, a place where, order data, payment confirmations, shipping tracking, delivery verification, all speak to each other and are updated in real time. The work we do at Ananse, we see this clearly through e-commerce and production workflows. Once a financier has line of sight, visibility into a creative's orders, the payments they're receiving, the deliveries, the fact that they're actually able to fulfill delivery data, all of that information now makes the SME bankable, whereas before they were too risky. So there's a significant opportunity in establishing open standards. Sheon from Afrexim Bank was talking about standards for goods and services. We also need standards for systems and the ability for systems to speak to each other. And that doesn't mean that we need new systems. We just need the existing systems to talk to each other. So when you connect logistics and, say, trade finance, financiers can now move away from their perceived risk of an SME. But now that they have data, and the data is backed by real life transactions, they can actually see the real risk and oftentimes realize that the real risk is actually much less than the perceived risk of supporting these creatives. And that then unlocks, faster and cheaper capital for SMEs. So again, we come back to the issue of collaboration. Collaboration between players like Ananse, who aggregate thousands of creatives onto platforms, logistics innovators, institutions in the logistics space like a DHL, institutions like a Frexim. We can all collaborate, working with government institutions like arts councils to create a single source of truth that then benefits the entire ecosystem, because that single source of truth unlocks capital for trade.
Thank you so much for that. Sheon, do you want to jump in on this particular conversation, just speaking about logistics innovators and trade finance providers just collaborating?
Yeah, sure. So you talked a little bit about what we are doing in Afrexim Bank with the Mensah platform, which also sits under the Africa Trade Gateway, which is a number of platforms that also help to talk among themselves on where and how to integrate I guess a pretty decent working partnership with the SMEs themselves, where they are from due diligence. Currently, right now, we're looking to put together a dedicated SME portal, whereby SMEs leaning on the market access and training side, those SMEs can sign up to the program, sign up to the portal, receive information about trainings that are upcoming, and this cuts across the entire continent and the Caribbean as well, actually, by the way. And so the SMEs are able to input information about themselves. We can talk across other platforms such that we know which SMEs have, a specific challenge, which ones, how are the women involved in those SMEs being supported, what capacity building initiatives are needed to support a specific set of SMEs, especially within the creative sector, right? And some of the trainings that we've looked at so far cut across film financing training, building your businesses up to a certain standard such that you, again, are able to raise financing for it. These are just some of the things that we've been looking at, and we're constantly looking at new ways of adding digital tools to support the SMEs. One more thing that I would say is that there is a digital financing tool that we're looking to launch. It's still in its infancy process, but to address the financing aspect of it, that's one thing that we're looking at.
All right, thank you very much. I know that Otsetswe needs to drop off now, but before you drop off, I would just like you to close out before we carry on with the conversation. Please go ahead.
Thank you very much. Before I drop off, there are a couple of points that I would like to raise. We are talking about MSMEs, right?
Yes.
And from my experience being in the sector, what I've realized is most of them what I categorize as they are not financially included. This is what I mean. Most of them do not have bank accounts. And we have to take a deliberate step to make sure that there's financial inclusion for them to be able to trade within our continent. And there's a big aspect that we can actually leverage on. This is our telcos. I believe that for all of us here, we do have your MTN, we do have your Vodacom, who have mobile money services that they provide. And this is one of the things that I believe we can tap into to make sure that it also facilitates financial transactions between our creatives whilst they move towards being bankable entities. And when we talk about how we can collaborate between digital platforms, as well as how we can leverage on the AfCFTA, one of the things that we must realize is there's lack of data for the sector that we are talking about. Data accessibility is critical. And we can actually use digital platforms because everybody has a phone nowadays in Africa to make sure that there's data sharing, which would assist them in learning what the customs regulations or custom requirements are in Ghana, which can assist them know what the business regulatory environment that they want to tap into is in Nigeria. And it's easy to do that when you have your mobile phone with you. This is also going to help us when we talk about collaboration between entities, government entities, and the private sector. There has to be a way that through the digital platforms that we have, there is interoperability. Your customs system, you should be able to pay with your phone so that you can have all the services that you need from one country being serviced through your mobile phone or your mobile device. So those are the things that I really wanted us not, I didn't want to part or to leave this platform without saying. And there's also from the regional bodies, there's also a lack of, or that rather a need for policy and regulatory framework harmonization. This is one thing that was mentioned by one of my panelists earlier. In terms of policy harmonization, yes, I understand that your Afro-Exim banks, your AU and your AfCFTA can actually create model policies. But there also has to be a way that we make sure that we encourage all African states to harmonize their laws alongside these policies or these model frameworks that can be done or facilitated through our regional organizations. This will also facilitate making sure that there's harmonization and uniformity so that when I'm in Botswana and I want to send my garments to Ghana, I know that the requirements are the same because we are one continent.
Absolutely.
And I'll also now start by saying, let us also leverage on blockchain technology. Somebody mentioned fintech. it is the in thing. We're in a moment of technology. Let us make sure that we encourage the use of blockchain technology. Thank you very much.
Thank you very much, Otsetswe. Thank you for joining us and for sharing very critical insights in contribution to this conversation. We appreciate it. Just speaking about, because Otsetswe mentioned very critical things, especially financial exclusion. Before we wrap up the conversation, and I don't want us to leave that out because that is very true. We could see what was going on in Nigeria, where some particular fintechs that it seemed like they sprouted out of nowhere, because what they did was that they mopped up the unbanked. They were able to identify the problem, and then they began mopping up the unbanked. In Nigeria now, if you're buying something, there are two particular platforms that you would always hear the vendors say, oh, pay this to my account, pay this to that account. You wonder, how did this happen? Because they identified that was a problem. Roberta, I want you to jump in on this, because with your foundation, I'm sure you would have had dialogues with, some of the grassroots creatives as well. Now that we see that a lot of them are being financially excluded, as we have conversations like this to influence policy and hopefully things are corrected, before things get corrected, what's happening right now, especially with the unbanked and the people that are financially excluded?
Yes, it's a big issue. I always say, I have this thing that I say, that never leave money on the table, and we are leaving a lot of money on the table because we haven't created an inclusive opportunity for everyone to partake in whatever it is that we are creating, whether it's fashion, music, manufacturing, because there's still a large population that is unbanked. I think I even touched on this earlier on. We are also playing on data. I keep telling people that what we're doing at the foundation now is, before we get to a position of investment, we are collecting data. We don't collect enough data in Africa. We rarely take time to invest in research and development and data collection. And if you do a lot of research, you will understand that, because I remember at the time during the COVID period, that's when economies really felt the impact of the unbanked and informal sector, because these are actually the drivers of growth and development in countries. But we often forget them. It's the same for fundraising. Because we lack data, we lack access to finance. A lot of MSMEs cannot even access money from banks. I deal with it on a daily basis. As an entrepreneur here, it's almost like I've walked a path that I'm now, because I've seen it and I've dealt with it, I've experienced it. I'm trying to create avenues and opportunities for people not to go through what I've gone through, especially as a female entrepreneur. So it's the fact that we're leaving out a huge population that are unbanked. It's not just affecting trade and commerce. It's affecting access to capital. It's affecting access to livelihood. There's so many facets of it, that we are ignoring. And I think it's something that has to be addressed. That is why I'm very glad that platforms like AfriExim are really taking significant strides to address that particular gap in the market. And if you look at Europe, I don't want to go and start comparing, but there's an integrated model, an integrated system that is ensuring that countries are all meeting, especially when it comes to global on a trade level. And we're lacking all of that because we haven't put our systems in place. It's still, I do a lot of business in Togo and other places, and I say that, first of all, the language is a barrier, the currency is a barrier. There's so many issues that we need to address, here on the continent. And I see it on a daily basis because my business involves dealing with MSMEs. But we do have some fintech solutions that we're also creating as a business. One that I want to mention is Ago. It means knocking in my local language. And it's basically is democratizing fundraising, because, again, we can go and talk about so many things that prevent, especially women and, young people from accessing financing. So we're bringing a system where we're going to it's a matchmaking platform. So if you have a business idea, you can plug it on there, and then we will match you with investors. So I leave it at that. We're doing our very best to address some of the challenges, you know, at the foundation.
Wow, that's fantastic. And I mean, that's why we have these conversations, so that we're not trying to prepare solutions in silos. We can't do it without being collaborative. You know, the more we collaborate, the more our reach is obviously is across and is greater. So that's why we're having conversations like this. I know that we are running out of time very quickly. I'm just going to move to you, Sam, just speaking, because I remember Otsetswe had mentioned something about the building of capacity, especially in Botswana, that she made reference to. I want you to just tell us how we could see like an effective collaboration that helps to standardize and export literacy training across sector. Because like I mentioned, one of the overarching threads that we've had is standardization. How do we ensure that our African creatives are able to perform on a global stage or compete on a global stage, and to ensure that we are giving quality? So with this sort of training, how do we export this sort of literacy, you know, across states?
Yeah, so I think that's a very important issue, the issue of capacity building and training, and importantly, how to ensure that the fragmentation that plagues us in so many areas within the ecosystem does not repeat itself when it comes to the process of capacity development and training. You know, we have a training program at Ananse, Afreximbank have a training program, Africa Fashion Foundation has a training program, everybody has a training program. That's good, but is the information we are imparting, are we not confusing the recipients of this information with the contradictory and differing information? Because again, coming back to the theme of coordination and harmonization, can we perhaps do a bit more work in collaborating with each other, standardizing some of this content and curriculum, maybe even cross-training on each other's content, you know, sharing training content. You know, we have good, what we think to be great content for our trainings at Ananse, but I'm sure that there's content that Afreximbank that we don't have, that we need. Sure, there's content that Africa Fashion Foundation has, you know, that we may also need. And what I'd like to see is more collaboration and more coordination when it comes to, you know, the curriculum that we develop, and how we then support these the fashion MSMEs with capacity development and training in a more systematic and coordinated way.
Fantastic. Thank you so much, Sam, for that one. We're going to move on to the very last question. But before that, to everyone that is listening, thank you so much for joining us thus far. We want to get your questions, so please use the Q&A tab and put down your questions so that right after we're able to answer those questions, and then we're able to say goodbye. Now, so far, we've spoken about so much, right? I mean, the conversation is quite in depth. And there's so much more that we need to speak about. And that's the reason why the roundtables will keep going on, because we're not only speaking about these issues, but we're preferring solution. And we're also updating on the progress, which we will be seeing after these conversations. Now, we've spoken about capacity, we've spoken about finances, a bit about infrastructure. If you were given the opportunity to sort of mandate one single high impact collaborative investment, either in infrastructure or capacity, to just help the MSMEs unlock that cross-border trade issue that we've been speaking about. And if you're giving sort of like a timeline of the next 12 months, what will it be for you? Will it be infrastructure? Will it be capacity? What will it be for you? And I want everyone to speak on this, starting with you, Sharon.
Yeah, sure. So from our engagements with SMEs, a lot of the issues that they seem to have of course, is with access to finance in a fast manner, in a way that makes sense for them. They don't necessarily need, several hundreds of thousands of dollars. In some cases, they may only need $50,000. But how then do you get access to your $50,000 or $10,000 as an MSME? So one of the things that I think is important to look into, and we are actually looking into this, is access to finance, again, through a digital platform. And speaking to the ethos of partnership, I see that taking place by partnering with some of these fintech companies, established fintech companies, and see how we can work together to address the access to finance issue, and of course the inclusion aspect. So I think that would be one thing that I'd like to see over the next 24 months. And this, thankfully, is something that we're already looking into.
All right, thank you so much for that, Sean. Roberta, I would like you to step in on this one as well.
I smiled because I think I
Yes,
have
I
that
saw you.
solution. I talked about it. So you can invest in Agro. So I think, coming back to the question, I'm going to dovetail a bit from what Samuel said earlier, right? And I think that we need to invest in gluing up the fragmented nature of the way we do business, especially when it comes to African fashion. So whatever investment that needs to be, the investment amount or whatever it is, it needs to piece all of the different elements. There's just too much happening. Even within a country, there are so many programs. Even in Ghana, there's several incubator programs, and we all don't talk to each other. Talk alone of Nigeria and Kenya and all of that. So I think that we need to take stock, understand what entities are doing, put it all together, see where there are similarities, and create a cohesive system, whether it comes to capacity building or building of infrastructure, financing. Let's find ways, because even at the foundation, we do give grants. We're not doing like big ticket sizes. We're doing the 10,000 to the 50,000. We support a lot of access to market opportunities. We support with production and manufacturing. So we're doing things that I feel like we're even repeating what institutions and other organizations are meant to do. So we need to find a way to streamline all of this. And so whatever that investment is, whether it's a big fund that brings all the different elements together, and then we identify the roles and responsibility for each partner, and they can develop that for the next 10 years with adequate funding, and make sure that whatever it is can be replicated. We can even have pilot countries. You can start with 8 countries or 10 countries, and then make sure that, we scale it across the continent. So I would invest in something like that. I don't think we need to invest in a new thing. There are too many things, too many platforms, already in existence. So that's what I would do with that. If I
Absolutely,
had that.
and I agree with you. There's so much going on. If we could just streamline, we'll see a lot of progress. Thank you very much for that. Sam, please go ahead as well.
Yeah, so initially I was going to actually say something similar, which is, a shared data model. There's so much data available, but it's sitting with different people in different organizations in different places. If we were to make that data available, the single source of truth we were talking about, I think that would go a long way to improving access to finance and to trade. But because there's been so much focus on finance in this conversation and trade finance specifically, if I'm going to change my answer. If I was to say, what one thing can we do over the next 12 months to improve trade for fashion creatives on the African continent, I would say just make AFCTA work. It's a fantastic policy, but there's still too much theory and not enough actual practical implementation on the ground. And in one sense, we've done the easy part, which is passing the policy, having all these African countries who are now ratified the policy and signed on, but now making it work, having the systems at customs that speak to each other, having the systems that calculate the duties correctly as i.e. zero, and just making sure that the customs officials at various borders are actually trained, understand it, and have systems to actually be able to implement the AFCTA. So that would be my one thing. Let's implement AFCTA. Let's get it to work. It could be an amazing thing for the continent in general.
All right, thank you very much for that one, Sam. There's so much that has been said so far. We're going to move on to the Q&A, but I would advise and encourage everyone who is a part of this Ananse Roundtable, because I know you're probably in the industry, the creative industry, the design, fashion industry. You've heard what Sam has said, you've heard what Roberta has said, you've heard what Seun has said. Whilst we are identifying issues and we are also identifying ways to address those issues, we also have to acknowledge that there are existing systems that have been put in place to address existing issues. Let's not ignore that. Whilst we have a North Star that we are moving towards, let's also take advantage of what AFREXIM has already provided, what AFF is already doing, what Ananse is already doing. Make sure you take advantage of it. Even after this conversation, just go on their platforms to figure out, okay, you know what? They provided this, provided that. How can I benefit from it as we keep on exploring other options and ways to ensure that we are removing all the barriers to trading when it comes to the fashion and design industry. All right, so I've seen some questions up. So I'm just going to go through the questions. I'm going to ask the questions, and I would leave it to the panelists to respond. All right, I can see one from Bakary Colley saying, in terms of the implementation of bilateral agreements, there is often lack of coordination or total disconnect between functions within government of authority to implement certain bilateral agreements. This is more like a statement, but does anyone want to jump on this? Does any of the panelists want to jump on this one?
Yeah, I'm happy to comment on that. I completely agree with the listener with that comment, and it goes beyond just. It's even difficult not only with bilateral agreements, but it's even more difficult with multilateral agreements like the AFCTA to ensure that all of these multiple parties are coordinated and are implementing the agreement in a systematic and structured way as it was intended. Going back to my story of the two presidents who were meeting and celebrating AFCTA, whilst businesses like us were trying to move products between those exact two countries, and the AFCTA that was being celebrated was not actually being implemented at the borders by customs. This is a problem. It's a challenge we face on the African continent, where we are often better at policy than we are at implementation, and this is something that we need to address, focus on implementation and delivery, so that we can move some of these agreements from paper to the real world where their benefits can be felt.
All right, thank you very much for that one, Sam. There's this question that I particularly like from Barbara A. Simmons saying, how can the African diaspora contribute to this progress, particularly as related to the role of the AFCFTA? Who would like to jump on this? Seun, would you like to jump on this, and Roberta as well?
So at AFREXIM Bank, when we're dealing with Africans, we have what we call Global Africa. So this may not necessarily just sit within Africans that are on the continent, but this also kind of touches the Caribbean markets as well, whereby we we see them as parts of one, right? So in terms of the systems that we're building, the solutions that we're providing, this cuts across, Africans in diaspora from that aspect, that regard as well. I'm more than happy to enter into the conversation on what it is that we're building, so we can find ways and new creative ways to integrate diaspora as we build solutions to increase trade within the continent and improve industrialization of the continent.
All right, thank you. And just to carry on, just speaking on finances and inclusion, this particular comment is coming from Josiah saying, is it of any interest for Pan-African financial hubs such as Afreximbank to bring MSME to the global stage with specific products that will suit their growth paths? Any specifics will be appreciated. This is what Josiah is asking, Sharon.
Are there any products that we're bringing to the global stage? Well, all the products that we're looking to develop, and this, we have a slew of initiatives that we're looking to put together, and that we have put together. They cut across all borders, whether it's on the continent, whether it's outside the continent, for different sectors and different regions. There's not a one type solution that focuses on one specific type of market. We're looking at addressing a global Africa issue, and we're looking at addressing, bringing more countries even into the fold. And we've seen that in Barbados. We've seen that in a few other countries in the Caribbean side as well.
Can I also add a bit to the previous question? I want to talk about innovative financing, right? So
Okay.
the diaspora have been in markets that are more liquid than the capital markets are more liquid than our markets. They've also experienced, I always say that we have different experiences. In Africa, our markets are not liquid. There's a bit more lack of flexibility when it comes to financing and all of that. So these are ideas and principles that we can join forces and create. Because I always say that the creative industry, as financing creative industries cannot be done as traditional financing. It has to be very innovative. It has to be done in a model that probably has never been created. So I think this is where the diaspora may come in with their shared experience and professionalism to help and enhance that. Remember, even if you look at Nollywood, right? I always talk about Nollywood as an example. Why did Nollywood pick up and rise? It's because of the diaspora and their constant demand for Nigerian film. I mean, I live in the States. I lived in North America for a decade, and I remember that when it started, everybody was going there. It started with those DVDs and the VCDs, and you would go to the market and you wanted to get Nigerian content, right? And that drove and enhanced and built, Nollywood. Although production and everything was happening on the continent. So this is a very great example of how the diaspora worked, with the continent to build an industry. Same with remittances, a lot of the diaspora bring in funds to the continent in, money transfer. And so there's the financial aspect that they can also partake in from investment. There's, coming in with ideas, because they're in more liquid markets, and even just the creativity itself. And another example is when you see a Wizkid and or a Davido with Chris Brown or somebody in a music video. It talks to our creativity in a global stage, and that is really, really interesting, versus just seeing us do something in our individual capacity on the continent. So there are ways in which we can collaborate with the diaspora to foster more trade on the continent.
All right, thank you very much. And I mean, you did mention with your platform being a matchmaking platform.
Yes.
So if you see a great idea and you, as an African in the diaspora, want to invest in Africa, that's a platform where you
use Ago platform. Yes.
All right, Sam, this question I believe will be directed to you. It's coming from Mama Diara saying, how do you see the development of luxury bags and leathers in the following years and conquering the international markets?
Yeah, that's a very good question. So having worked with, hundreds of creatives who make bags and shoes, leather products, the biggest challenge that I see is actually the supply chain, more so than demand. The problem that we see on our platform with leather goods producers is that oftentimes they are not able to replicate orders because the supply chains are so broken. They source in very limited quantities. In effect, what happens is African creatives in the leather space buy offcuts that are the leftovers of production in Europe and Asia. Those leftovers are brought and sold in small pieces. So, if you're a fashion creative, you make a really nice bag, and you make it with an offcut, in a particular red textured leather, you maybe only make 2 or 3. You put it out there and you get 10 orders or 15 or 20 orders. And then that becomes a problem. And so I think the biggest challenge that I am seeing is not so much even access to markets, but fixing the supply chain so that these businesses in the leather space can scale. And this is an area where policymakers need to collaborate with the private sector. I mean, we export some of the best leather in the world is in Africa. It's in that sub-Saharan belt. So Kano, for example, in Nigeria, there's amazing leather that's available, and most of it is bought and shipped as raw leather to Italy, and then you buy it back as genuine Italian leather with Gucci and Louis Vuitton bags. But the original leather actually came from Kano. So fixing some of these supply chain dislocations will really help leather merchants scale up.
All right, thank you very much for that. I think we're going to just answer this very last question and then we'll move on. This is coming from Bakari Kolezo saying, I want the speakers to elaborate on the lack of credit information and the perceived risks associated with those involved in the fashion business in Africa. Does anyone want to jump on this?
I can get started with it, and the others can jump in. So the challenge there is that a lot of financial institutions don't have data on prospective clients who want to lend. As we've been saying, a lot of merchants, a lot of MSMEs are unbanked. There's not much information about them. There's no trading history. Even getting a physical address as to where to find them that doesn't always exist. And so the challenges legitimate challenges that financial institutions face when it comes to knowing their customer and being able to evaluate the risk associated with the customer so that they can service that customer. Now, in the absence of data, financial institutions tend then not to act at all because they're not able to assess the risk. And so they're too scared to proceed with providing a facility. There's a lot of data, however, sitting in different places. Some of it is sitting with, mobile phone operators. Some of it is sitting with platforms like Ananse because we have merchants that are trading on our platforms. We have their trading volumes. We know who's good at fulfilling orders, who's dependable, who's reliable, who gets good reviews from their customers. And so if there was a way of, this is what we're talking about, creating their data source of truth that is shared, this kind of shared data would then enable other institutions to access different, there'll be different organizations contributing to this data pool, and many others will then be allowed to access it with the permission, of course, of the people whose data is being shared. And that will open up and reduce the risk, because there's now more information available for financial institutions to make financing and lending decisions. And I believe there's some initiatives that Afrexim Bank's working along on KYC that perhaps Sharon can also talk about.
Yeah, so even aside from the KYC issues that the bank is working on, I think we really just have to speak towards why we're doing these capacity building training aspects. And part of these things are to bring your MSMEs from this level onto this level, whereby there's enough information, there's standardized information such that a financial institution is going to look at your books, going to look at your history and be able to make some sort of informed decision, right? So this is kind of where we want to get to. Aside from that, yes, you did mention that there are tidbits of data here and there, transaction history, records, and these typically are sitting with the likes of other fintech companies who are dealing specifically with these MSMEs. In that regard, then the question of partnership with these financial institutions is then a question that sounds very, very valid, right? In engaging with these fintech partners, they can say, hey, listen, we have a slew of SMEs that we've been working with for the past X number of years. We understand them very well. These are the folks that we're willing to work with. How can we work together as a financial institution, whether that be Afrexim Bank or someone else, to then provide services, financial services to those SMEs. But we can't completely ignore the fact that there has to be standardization across the credit system, across data, across what it is that you look for, because at the end of the day, you do want to manage your risk, and financial institutions are going to find that very important. So there has to be creative ways of dealing with that problem.
All right, thank you very much for that one, Sheol. And someone did ask, and I'm just going to breeze through this very quickly because the person is asking the titles of the organizations represented here. Of course, we have Mr. Sam Mensah, who's the CEO and the founder of Ananse. We have Roberta Annan, who's the founder of AFF, that is the Africa Fashion Foundation. We also have Sheol Cardoso as well, consultant, export development, SME development program at Afrexim. And we also had Otsetswe, who's no longer on the call, the acting CEO of the National Arts Council in Botswana. So these are the organizations and individuals represented here today for the roundtable. Okay, this is where we will be wrapping up. A lot has been said, a lot of insight, and a lot of issues have been dissected. Mr. Sam, I would like you to just go ahead with the final call to action.
Yes, so I have, as I often do during these conversations, I make a selection of, my best, most memorable takeaways from each speaker. So we'll start with Otsetswe from the National Arts Council of Botswana. She spoke about the shift towards commercialization, becoming trade enablers, these national arts councils on the African continent, moving away from just preserving culture to looking at, how we can actually commercialize and make money from our cultural assets as Africans, realizing that the creative sector can be big business for the African continent. She also spoke about the need for interoperability. This is a theme that kept coming up. Interoperability of systems, interoperability, having APIs so systems can speak to each other. She also spoke about policy harmonization. Again, this is a theme that kept coming up, the need for policy and implementation harmonization across, the continent, and, issues like AfCFTA. AfCFTA is a fantastic opportunity. It's a fantastic example of policy harmonization on the continent. Now we need to see implementation harmonization. So that was another theme that kept coming up, harmonization. And then Sharon from Afrexim Bank, very interesting data point, 90% of the businesses in Africa are SMMEs, and they contribute 50% of the GDP of the continent. So really, you cannot ignore anything that's happening on the continent that doesn't cater for SMEs. Will not achieve its full impact. And to that end, you spoke about PAPS and the progress that has been made with PAPS. PAPS is a very, very needed facilitator for trade. The payments are a major blocker. A lot of fintechs in African countries are beginning to reduce the friction for transactions. As I believe if you were talking about, the fintechs in Nigeria, and how when you are in the market, you can hear the traders talking about pay me with this platform, pay me with that platform. Yes. So there's been a lot of progress made in different African countries within the countries, but paying across borders is still very far behind, and it's still painful, and it's still expensive. Mwazia was talking about the 8 to 30% transaction fee. Now, when your margin is only 15%, and you're paying 15% in transaction fees, then you're not making any money from the transaction, and the business collapses. So solving this payments problem is essential. It's absolutely vital to unlocking the trade potential on the continent. And then Sharon also spoke about standards harmonization for goods and services. Again, the theme of harmonization came through. Then there was Roberta also mentioned, I like the point she made about Africa needs to be more than just trendy. We are naturally cool. We just exude cool without even trying, whether it's our music, our art, our culture, our language. It just comes out of us. But we're not that good at commercializing it. More people actually make money out of our coolness than we do. And so, we really need to wake up and get with the commercialization agenda. And they spoke about funding the Agro platform that they're launching to support fundraising platform and matchmaking platform. And then there was also, again, she made the point about the need for better streamlining of efforts. We spoke about training and how, different organizations, everybody's doing training, but how harmonized are the training? Can we agree on standard curricula? Can we cross-train so that we're not all spending time and resources developing the same content, but collaborating and leveraging each other's strengths, ultimately with the goal of improving trade for SMEs on the African continent. So I think the message for call to action for today was harmonization and coordination to make trade interventions on the African continent more effective.
Wow. Absolutely brilliant. So much that we've been able to achieve from this conversation, and we're looking forward to more conversations like this on the Ananse Roundtable. Thank you so much to every speaker. Thank you for taking out time to contribute to the future of fashion and design in Africa. And to everyone who joined us from different parts of the world, we appreciate you. I will encourage you once again, make sure you are just following up with everything that has been spoken about today and the platforms that have already been made available to help you as a fashion MSME. Follow ananse.africa on Instagram just so that you keep up with what Ananse is doing and Ananse's partners and collaborators. It will definitely be beneficial for you. My name is Ifunanya Igwe. I'm a broadcast journalist and an international event host. It was such a pleasure moderating this session. Till next time, have a lovely rest of the day.